All right, good morning, everybody. It's October 31st. That is my date of birth. I got to the party and I did the Smurf. Sorry, little beastie boys. Hey, welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. We are going to cover gold, oil, Bitcoin, the stock market, and we're going to say for the end, how about dollar pairs and yen pairs? In fact, I'll take requests when we get there. So you let me know what you want to cover, but we will start with the big ones: gold, oil, Bitcoin, stock market. Yeah. Cool. In the description below today's video, you will see links to many resources, a plethora, a cornucopia of resources made available to you. The number one here is a brokerage firm that doesn't make money trading against you like most of them. Trader's Way has an ethical business model based on a symbiotic relationship. They want you to succeed because they provide a service. Okay. And the more you succeed, the more they can provide a service to you. Hey, that's way better. Yeah, of course. So therefore, they value your education, and that's why we're all gathered here today. Anyways, check out tradersway.com. There's also a bunch of other links to like my book, my education service, my technical analysis AI service, my fundamental analysis AI service. There's a lot in those descriptions below. But hey, let's get on with it. Let's do gold, oil, and Bitcoin in the stock market. I just want to see by the poll here which one you're most interested in. And it looks like you're most interested in the S&P 500. So let's start there in a second. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay, let's get on with it. Let's zoom in on the S&P 500. You can see where we are on a daily basis. We had yesterday an up, which made sense. Remember, we talked about it being probably an update just on a relief rally, that nothing horrible happened over the weekend as far as geopolitical risk. And now we are up pretty close to this area. Okay, again, these are daily candles, so you're probably looking at it on a different point of view, like a 15-minute chart. I'm thinking, but maybe today, but probably more like tomorrow, which is a Fed day, by the way. We will probably move along like that. Now, that's just probability. It's not a guess. It's just the probabilities of that continuing makes a ton of sense. If it doesn't, then that in of itself becomes sort of an interesting change, in particular if we eventually start doing that. Well, that's what I wanted to do, but that's not my goal as a technician or my job as a technician. I need to look at what is likely to happen. And so that's what I'm looking at. Again, you can see like there's a bit of a gap from where we are right this second to where we need to get. So that shows some up. So it could be another up day up until this 4,200. And then maybe she'll roll back around. Right now we're kicking off that 50%. The next target would be around 4,000. Okay, 4,000. Which is a 618 Fibonacci retracement. Okay, that seems like that could reasonably happen. Cool. You guys are also interested in gold. Gold's at 2,000, as you probably know, or as you probably should know. What my analysis was at Forex.Today yesterday, and at Investor Boot Camp yesterday, and probably Quant-in-a-Box yesterday, was get ready for a kickoff that 21. Just so happens to also be 1989, otherwise known as the central pivot point. And well, it is held. It has not made a higher high yet, but maybe that's what happens in the future. So today's target for gold is 2010. And if we get up there, maybe then tomorrow's central pivot rises a little bit. Then we have a pullback, and then we finally get a new higher high. What do you guys think? Can we get over 2010? Maybe 2020? 20, huh? You think we can do 2020? Could be, rabbit, could be. Okay, so anyways, riding that 21 on the 4H. Very cool. You guys are also somewhat interested in oil. I'm very interested in oil right now. And so what I had indicated several days ago is sort of this 82 to 81 area is of interest. We got 82.50 here. Then there's another one here. And so what I might be interested in doing today is allowing it to maybe fall and then, start building a position. Some people might want to buy gold to hedge their geopolitical risk. I think I want to buy WTI to hedge my geopolitical risk. So I'm very interested in energy, in particular that I think we don't have any in storage. We're incredibly vulnerable as an economy, but also as a globe, and geopolitical risk doesn't help any of this stuff. So anyways, I'm very, very interested. If you go into a 4H, you can really see that I've highlighted this multiple times where we have, bottom here, and this is where we are now. So yeah, and we might be stabilizing on the, right? Because one of the things I make a big deal about in all my training is a double bottom of a double bottom. And maybe that's forming. See this double bottom? And now we have this double bottom, which then in of itself creates a double bottom, which just is multiple time frames. Long-term and short-term investors both agreeing for the same thing, just on different time frames. You guys are not really interested in Bitcoin. Might as well cover it though, huh? Okay. By the way, go ahead and type into the chat what dollar pairs and what yen pairs you want me to cover, and I'll cover that next. Okay. Meanwhile, we had this move from the bottom of the range to the top of the range, which we got. Now you got to move this range over, and be interesting at some point if Bitcoin does come up, comes back down into the 32,000 area, and then continue mission to the upside. That would be a risk on play. Target is 40,000. Okay, anything else going on? No, that's pretty standard. All right, so we're at 34, we'll call it 35,000. Okay, so maybe it drops back down closer to 30, and then we're on our way to 40 for what, $10,000 move? Yeah, well, gee whiz, that's a 33% move to the upside. Wow, wouldn't that be interesting, huh? Too bad it's not 30 cents instead of 30,000, right? Cool. So anyways, that was gold, oil, Bitcoin, stock market. Let me know what dollar pairs and yen pairs you want me to cover. Go ahead and just type it in. I will just start by moving over to the USDs. Okay. The USDs. Okay. I got to be careful. Let me move a couple of these things because, okay, I'm still risk off. So in this one, you can see I'm just at the upper bound of a range, and I entered a trade on a smaller time frame, and now I'm sort of paying the penalty of mediocrity. I'll call it mediocrity. All right, so a couple of things here. If you wanted this to go up, which is actually risk off, it might not happen today, but it might happen tomorrow. So you want to continue this narrative of USD CAD. So that used to be resistance, and then it became support. Okay, and then this was resistance, and then it became support. And so it gets kind of ugly where it could do, one of these things before moving up, which would mean, risk on really the rest of the week. Is that likely to happen? Well, it's one of these things where it could. It could. And that's why I have to adjust. The other reason I want to adjust is normally what you do is you look at those two things, a low and a high, and then you look left and you want to drag this across, and you want to get into a position sort of like this. Oh, like the one I'm in. Yeah. The fact that it has failed to make the higher high and instead drop back below, like this box here, is disconcerting to the upward move. So we went from definite risk off based on geopolitical risk to suddenly not risk off. So is that here to stay, or is it a glitch in the matrix? Well, if you think it's a glitch, then I would say, this is sort of the range, if you will. So maybe I can move this a little lower. And maybe it moves around in the range, maybe closer to the median price, and then the dollar regains some strength, that kind of stuff. That's assuming you're in risk-off mode. Now, as you know, Bank of Japan had its meeting last night, and they reaffirmed their yield curve control, and they didn't make giant adjustments. And so anyways, what happened was, okay, we got a move back to basically where we were. Okay, now the distance from here to here is 200 pips. And well, that's a good evening for yen, since it typically only moves 68 pips a day. All right, so anyways, here's the thing. Now you might want to just play this range and decide, do you think the upward move will continue in the future and buy a dip? Or are you going to kind of trade against it? Or like, I don't know, like how are you going to behave now that yield curve control has not ended, interest rates did not go up, it's continue mission, or are you going to sort of trade against it? Well, that's going to be your call. I don't like trading against it. Okay, but anyways, that happened last night. Pig dog, this is not a good currency pair. Well, it's not a good, pound is not a good currency. So anyways, we have dollar weakness right now. And sort of what I'm trying to decide now that we're back at the central pivot point is, do I want to get short? And the answer is yeah, probably. So now I'm going to use technical analysis to discern when is that a good time. Do we want this to go all the way up to the top? Yeah, it could. That doesn't get us above our M3 or anything like that. So we could. So what that does is say, well, I want dollar strength. And as I've already shown on the S&P 500, it just might not be today. It might be tomorrow. So that's kind of where I'm in, where it might fall today, but it probably will wait for tomorrow. And you kind of then get this rotation that way soon. So I got to be cautious. Now, it could be today, of course, after the open. Okay. And you probably want euro dollar, right? Yep, euro's strong right now, and we're back. Okay, we're back. Gee whiz, that consolidation is nasty, huh? Nasty consolidation. So I'm going to adjust it there. And now we have a new one here. And what do you want? Well, as long as you got risk on, okay, dollar weakens, euro strengthens. It has nothing to do with euro, by the way. Okay, you can't tell me that that's the governing council's good work to suddenly make euro strong. No, out of the blue, okay, hedges against risk were taken off, and it makes the dollar look weak. Okay, that's fine. Okay, so now what? Is that what's going on? Yeah, maybe. I'm still inclined to not really love the euro right now. The problem that I have, if I have more than one problem, emotional or psychological, here's the thing. This normally goes up, and that's normally what I want to do. So then what the heck was all this nonsense? Okay? And this is me kind of yelling at the market, like, the market should have done this. Okay, that's seasonal. So then what was all this other nonsense? And are we really just going to go up there? Okay, so that's the normal seasonality, and something definitely happened different this year. And I'm worried if it's geopolitical risk, then it can easily just come right back without any warning. So it's a difficult one to play. It really is. Okay, so I'm really going to watch the stock market kind of lead the way. So even though it looks like there's risk on, technically the stock market is, not making higher highs. So I have to lean on the risk off. And if I'm leaning on the risk off, then I have to think this way as long as the S&P 500 is making lower highs. Capiche? Capiche. Yens. Let's do the yens. Bada bing, bada boom. Okay, which yen do you want me to do? I already did USD, yen. Which one do you want me to do? No, yep, no, slow. Everybody slow today? Too early in the morning? Kiwi yen, you got it. Let's do it. Kiwi. All right, now New Zealand dollar is probably the sickest mule of the bunch. So, yeah. So it would probably be the last yen that I would trade, assuming that you are now bullish again with the reaffirmation of yield curve control. So this is the sickest horse, the sickest mule, right? The ugliest sister. So anyways, so that's what it looks like is going on. When you look at weekly pivots, this is an area of concern. And then you look at monthly pivots, and this is an area of concern. All right. So yes, this could go up, but it's the least likely. Now, if looking at PSAR, it does put you north now that we've had a higher high. So if you were going to be cautious about maybe your entry, I would look at sort of this zone. And maybe between now and Friday, maybe, there's a change this way. Okay, but that doesn't make a lot of sense fundamentally. So I would much rather you have said Euro yen. Okay, Euro yen makes much more fundamental sense. So I will do that one, and let me clear it. Okay, so same, really. Okay, same. Maybe you can get a dynamic level of support like that, somewhere between, okay, one standard deviation and the mean. We are at a weekly take profit, monthly sell pivot. So that would be a great opportunity for bulls to take some profit, have a little dip, and then bulls buy it back again. Remember, there's no bears in this market. Do you know how I know? It's an uptrend. Okay? You know what I mean? Yeah. The link I sent you yesterday hasn't been opening. I tried it. What link? I sent you a link yesterday? Sorry, you have to be more specific. Yeah, what link is that? Honestly, I'm sorry. I've forgotten. I sent you a link? I did? Okay. Well, anyways, maybe Veronica, why don't you email me, wayne@fxbootcamp.com, and I'll take a look. It just doesn't ring a bell. I don't recall sending out an email yesterday, but maybe I did. Who knows? So anyways, I gotta go. That was your half an hour power. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. It's Tuesday, so if you're in my day trading group or swing trading group, we will go through the week on the street. Yeah, so I'll see you at 4 p.m. for that.